Fovis Mazaz, Scott Ariel Africa, Rockstone, Sitco, Chapman's, and Nolan's. A round of applause to our sponsors, please. Right. Our last discussion is likely going to be also explosive. It's on policy versus business reality. And as a non-financial or financial markets person, we've got moderators who will be running this, Rufaro Zengeni and Tinashe Murapata. Are they already here? I can't see them. Can they come up to the podium? And this session is special. I understand is actually going to be live on X. And you know the comment section. Thank you. Tinashe? Oh, there is. Okay. Thank you very, very much, colleagues. So who'll be leading? Because I wanted you to introduce your panel. Are you gonna do it? Tinashe. All right. So, ladies and gentlemen, let's give them a round of applause while let's ask Tinashe to come and introduce the panel. Tinashe, the floor.
Thank you very much, everybody, and great thanks to the sponsors and for these important discussions. I've enjoyed them since the morning, and this time around we'll have a plenary session on policy versus business reality, the financial reporting landscape under ZIG, and we'll have Professor Gift Mugano, if you can come through. And then we'll also have Perseverance Gwanyanya, Tapiwa Chizana, and Louis Hussein. And how we're going to do this is we've prepared a couple of questions for them. Thank you, gentlemen. So clearly, what we have here is a classic case of the policymakers telling us what to do. But as we have noted from the morning, we also have certain principles and governance principles that we adhere to. And what we're trying to do is to reconcile the two. And we've got this eminent panel that will discuss with us. So to start off with, I will start the question, I will direct it to Louis Hussein, and it's around trading and business activity in Zimbabwe. We know that it's 80% US dollars. That is from a revenue and from a cost perspective. What are the accounting rules and best practice for reporting? And I just want you to just focus on just the best practice. If 80% of your trading currency is a particular currency, what are the best practices, just generally?
Thank you for that question. I think for the benefit of those joining us live, I'll ask everyone else to bear with some of the repetition of the issues that have been presented. The situation that you're describing really is about US dollar as a functional currency. So when you have US dollar as a functional currency, the standards, IFRS standards that we use in Zimbabwe recognizes that you are going to primarily prepare your financial statements in that functional currency, which would be US dollars. And in addition to that, you may present your financial statements in a range of currencies, to address various users that you have. So an example, if an entity has an investor, a Chinese investor, they may insist on presentation of those financials in RMB, which would be the currency that they would understand. So in terms of international best practice, you would present in your functional currency and a range of other presentation currencies that may be appropriate.
Thank you for that. So now the RBZ has actually insisted that the reporting currency is actually ZIG. Now, given that, and we've seen the market has not come back and said it will report in all three currencies or whatever, however many currencies we have. They've adhered to that, and they're also just reporting in ZIG, which a lot of market participants have said, you know, it's all very gibberish. How do you reconcile with what you've said as best practice and what the RBZ is actually insisting?
So if you read the monetary policy statement, it started by saying all entities must present their financials in ZIG. As the accounting standard setter in the country, we met with Reserve Bank. We had a number of deliberations, and the outcome of those deliberations was that where a company has a functional currency that is not ZIG, i.e. any of the other currencies, they would be allowed to still present their primary financials in the functional currency, and for regulatory returns purposes, i.e. returns to IPEC, Reserve Bank themselves, SEC, ZIM, ZSC, they would be allowed to present a simplified form of financial statements that would include a translated, in colloquial language, balance sheet, translated balance sheet, cash flow, income statement, and select notes to try and address the issue of cost of preparation, the timeliness. And on that set of financial statements, auditors would issue an opinion as to whether those financials have been prepared in accordance with that framework. So there was some accommodation to try and address that. In our interactions with Reserve Bank, one of the things they stressed to us was that as a monetary authority, they are transitioning the country to monocurrency, which will be a local currency, and their insistence on using ZIG as a presentation currency was part of that transition. But having listened to the issues that we raised, having obtained those issues from the market, we were able to obtain that.
Okay, thank you very much, Louis, for that. That's new information as far as the market's concerned. Do you know when you guys are going to put out a statement, or the RBZ is going to put out a statement to that effect?
So because of the timelines, the Public Accountants and Auditors Board actually prepared a paper, and that paper went directly to all the regulators in the financial sector, and those regulators made contact with their various preparers. So their preparer institutes, preparer entities, so your banks, your insurance companies, etc. They would have received this communication to say that these financials in the interim would be for regulatory purposes. And where you come across them, you'll find that any audit opinion on them would actually clearly mark that these have been prepared for compliance with the monetary policy statement. The other thing we were able to do is all the audit firms in the country also received this guidance to ensure that they'll be able to use it as they prepare their audit reports.
Fantastic, thank you. And just on that, just as a follow-up, a quick follow-up on that is, over the last 5 years, given what you considered as best practice, and we know that the authorities have always been insisting on how we should report, but why is it companies have not, on their own volition, published US dollar accounts, for example, or 3 parallel accounts, US dollar, ZIG, and a combination? We've always seen ZIG and not the US dollar. On your own, why haven't you just done that?
I guess in my other life, outside of being chair of the standard setter, I'm an auditor. So I think I would like to defer that question. I don't know if we have any preparer on the panel, but I think one of the reasons that we get is the cost, the usefulness, and the potential conflict that presenting multiple sets of numbers would create for users, as well as then the need to reconcile. If you're presenting 3 sets of numbers, that would just make the whole financial reporting process cumbersome.
Okay. All right. I suppose that's the environment in which we operate, very tumultuous. So to Percy, could you guide us through the RBZ reasoning in weighing in on an issue that is outside of the RPZ remit? The country is a multi-currency, meaning businesses are allowed to trade in US dollars. Why can't it report in the US dollar currency in which it dominates? And just walk us through the thinking that RBZ had in commenting on something that is outside of their remit.
Thank you, Tinashe. I don't think RBZ doesn't have concern with the reporting, financial reporting. It does. But firstly, RBZ as a policymaker is concerned on firstly the welfare of citizens, but secondly the economy, but more importantly within its mandate, stability in the country. But of course, in the economic realm, then falls the concerns of accountants and auditors. And I think it is only fair to expect the Reserve Bank to give due consideration to these constituents. Now, looking at their primary mandate, which is stability, and what is needed to achieve that stability, and starting with the objective that underpins stability being to eventually de-dollarize as a country. And reflecting on the journey we have traveled, which is a journey of hyperinflation and confidence issues therefrom, I think there's quite a lot that the central bank needs to do relating to the optics, relating to even the psychology, but more importantly, relating to the role of a policymaker, that is to forward guide the market. So it is in the interest of Reserve Bank to forward guide the market where we want to go as a country, which is to eventually de-dollarize. But by saying that, I'm not arguing that the central bank should disregard the best practice, regulations, etc., that underpins reporting, accounting, etc. But whilst regarding the same, I think the objective of eventually de-dollarizing and supporting our own currency should show at every level and every policy of the central bank, which is essentially why I think the question about the central bank has taken interest in the reporting currency. They have taken interest in this issue because the central bank is trying to forward guide the market where we want to go. The central bank is also trying to deal with the past. Otherwise, without support, this currency may not be able to survive. It is extremely difficult for any currency to survive co-circulating with the US dollar. Countries that have their own currencies surviving and which are functioning well are doing so because of some support from the law, the support from a multiple currency regime. Even in South Africa, the rand itself, I don't think it will survive if it is allowed to co-circulate with the US dollar. To some extent, it may not withstand the US dollar. Now in our environment, we have allowed the multiple currency system, and knowing fully well the challenges that our local currency would encounter as it co-circulates with the US dollar, it is only fair to suggest and logical that the central bank should take an active role to support its own currency. And this is the extent to which I think the issues relating to reporting and other issues that essentially support our currency are basically reflecting the uniqueness of our situation, that we are in a multiple currency system and therefore need to support our local currency.
And a follow-up to that, Percy, did the RBZ actually engage the accountants and the professionals to say this is what we are thinking of and this is what we want to do, rather than just put up a statement?
When the monetary policy statement was being crafted, I'm sure the central bank engaged industry players. The governor is on record about the engagement he had with the market. I'm not very sure the extent of engagement with the accountants and auditors, but I just heard from a colleague here that there was some engagement. They could be post the announcement of the monetary policy statement, but there were engagements that happened.
Okay. So ZIG was introduced in April 2024, and a year later, it has devalued by about 50%, meaning it has lost about 50% of its value. Meaning, if you infer, inflation is likely to be around 100% on the ZIG. Meaning, ZIG reporting will be under hyperinflationary rules. Yet businesses know what they're operating under is USD. So there's no hyperinflation. We're not experiencing hyperinflation because most of our trade is in USD, whether it's cash or it's Nostro, but it's still, USD. So this gives what we would term as market analysts, it's very misleading. But the reason why we have you here, Percy, is so that we just understand RBZ's thinking. You have that contradiction and that paradox. Give us a glimpse of how RBZ is looking at this, because certainly if we're going to report in ZIG, it's going to be under hyperinflationary rules. And yet we know we are not under hyperinflationary because most of us trade in US dollars.
Yeah, I want to propose that I don't think we are in a hyperinflation environment. I think most of you may agree with me that the environment obtaining post-ZIG introduction, save for 2 or 3 months up to September, when major interventions were done by the central bank, reflect an environment of hyperinflation. Of course, ZIG is a new currency. We did not expect even the calibrations of ZIG to have been done to max that any depreciation of the currency therefore after was not expected. Therefore, we see the depreciation that happened in September of our currency is just an adjustment in the ZIG currency. So it was an essential adjustment, and thereafter, which may also reflect that maybe at the introduction, we may have not pitched at the right level in terms of the other fundamentals. But we saw that adjustment happening, and post that adjustment, we don't expect another adjustment to happen. The only adjustment that then happened, which I think is another correction, happened in January, where inflation again peaked on account of rentals. And reasonably so, because rentals, being contracts, are normally negotiated at the beginning of the year, they couldn't have been adjusted during the course of the year. So this, because of this, I want to suspect that the depreciation was necessarily a reflection of the necessary adjustments in the currency. And going forward, beyond those adjustments, and basing on the measures, the monetary policy measures that have been implemented and are being implemented, we don't expect any shock in our currency, and therefore shock in the volatilities.
Okay, just on that, just to clarify, so far what we've been given by Zimstats is ZIG month-on-month inflation. They haven't actually started reporting year-on-year. So the first year-on-year, we're going to get it in April, so this month. That's the first time we're actually going to get year-on-year inflation on ZIG. And because there's been a devaluation, we know that naturally the inflation on ZIG will be over 50%. We could argue, I mean, I'm arguing it's likely to be closer to 100%, but you could argue it's certainly more than 50%, which according to the accounting rules, puts us under hyperinflationary. But as you've correctly noted, we are not under hyperinflationary because most of the trade is actually in US dollars. So isn't that the gibberish that the market is saying? You're actually promoting that gibberish where we're reading accounts that are not in tandem with what's actually prevailing on the ground.
Agreed. We expect inflation this month, which is the birthday of ZIG, to pick up. And that's on account of the spike in inflation I have spoken about in October, where it peaked at 37%. And I've already indicated that could have been, or that might have been, a necessary adjustment in the economy. And because of this major intervention that happened from the central bank, and because of a relatively stable environment obtaining thereafter, and for a long time, from October to April now, with the projection of that environment continuing until the year end, we are confident that stability is going to be more entrenched going into the rest of the year. Okay. And therefore, realistically, from what we see on the ground, it is more encouraging that the reporting be considered under normal environment. I have already spoken about the role of policymaker in forward guiding the market. We are agreeing on the occurrence of stability on the economy, obtaining stability on the economy currently. I think we will be doing ourselves disservice to then forward guide ourselves, but also the externals about the environment as a hyperinflation environment. But also in terms of how this hyperinflation is considered by accountants, You may want to also agree with me that considering our unique circumstance of multiple currency regime, it is very difficult for the ZIG currency to be a more preferred currency in relation to the US as a store of value, as a unit of account, and as a standard of deferred payment. It cannot measure up clearly to the US dollar. And therefore, from the beginning, before we even talk of anything, it is disqualified in terms of the criteria that is used to consider the hyperinflation nature of the currency. It is against this background that Zimbabwe and the ZIG be considered on its own as a different currency under different circumstances, but also to support the imperative of de-dollarization. I don't think classifying this economy as a hyperinflation serves us well as policymakers.
Okay, thanks. Maybe Louis can respond to that, some of the things that you've spoken to.
I think I'd just like to emphasize something that Percy said in the last, in his last remarks, in terms of when you're looking at the issue from an economics perspective and from an accountant's perspective. As accountants, we are using international financial reporting standards, and when we talk of hyperinflation, we are not talking of the same hyperinflation that you are talking about. The hyperinflation we're talking about, when we started reporting in IS 29, we did not suddenly wake up and say we're in hyperinflation. There was a process. We transitioned into hyperinflation. We monitored inflation statistics for a period of 3 years. We monitored various, there are 4 other sets of economic behaviors that we looked at. And out of that, we then concluded that Zimbabwe met the definition of hyperinflationary economies in terms of international accounting standards, not necessarily in terms of what an economics perspective would say to us. And in our interactions with Reserve Bank, we have indicated this to them to say, as we monitor, as we try and transition out of hyperinflation accounting, of being in the realm of IS 29, we actually have a transition out of the standard. And again, we're looking at those matrices. Inflation over a 3-year period, we got to 100%, we moved into hyperinflation accounting. As we move out of hyperinflation accounting, from an accounting perspective, we are not looking at merely 3 months, 1 quarter, 2 quarters of inflation statistics. So there will always be that disconnect between the accountant's perspective and the economics perspective.
Okay, Rufaro, you can comment. And Rufaro and Percy and Louis as well, just briefly also comment on the financial services sector. We saw some of the reports coming out that 56% of their profits are actually revaluation profits, which is purely ZIG revaluation, so it's not really real. And this, it's masking the deterioration of their balance sheet, which RBZ, as the custodian of the financial sector, are they okay with that?
So I just wanted to double click on what Louis talked about, which is what triggers reporting in terms of the hyperinflation standard, that it's happens after a 3-year review of statistics. And now I want to get a little bit technical, and I think I'm in the right space for that, given that we're at an accounting and auditing conference. The whole idea of financial statements is to be useful to the users, to make decisions, to understand what's happening in a particular business and that sort of thing. And the idea of countries that are experiencing high inflation to use that standard and to report in that way was to give the user the best information to make sense of what's happening in that particular company. And I've been a user of inflation-adjusted accounts for some time now, and we call them gibberish for a reason. They're just not useful at all. We look at the US dollar numbers. If US dollar numbers are not available, we look at other non-financial matrix to analyze the business. So given our experience as a country, every accountant and financial analyst in Zimbabwe has had to deal with inflation-adjusted accounts, and to the extent that they are understandable at all, we probably have the most experienced, skillful drafters and users of these. But are we not at a place where we ought to be considering a completely different way of reporting in an environment with hyperinflation? That is to say, everybody in Zim who's involved in running a business actually uses US dollar numbers or other matrix to make decisions week on week, month on month, quarter on quarter, right? There's compliance for policymakers or for in terms of the rules, but on the ground every day, people have figured out how to run their businesses. And surely those hacks are actually pragmatic, they're useful. Are we not better off revisiting the entire hyperinflation framework and looking at the hacks that people actually use on the ground running their businesses and saying maybe the reporting should look a lot more like that?
Yeah, thank you for that. I think I'll agree with you in a number of respects. IS 29, as we are currently applying it in the country, is defective. I think in the conference we discussed a number of those issues, particularly the inputs that are required to produce the IS 29 numbers. They have been a challenge for Zimbabwe to produce. So applying the standard in its form has been difficult. The alternative, so from a standard setting perspective, the logic behind IS 29 is historical cost accounts are meaningless when there's hyperinflation. So you would want to go to some form of current cost accounting. And because financial statements, as they are prepared under IFRS, are a general purpose set of financial statements, it has been considered that the CPI, the general CPI, is the best measure of the change in value. So that would be the basis. But I think one of the additional things we've seen in this conference is that maybe as preparers, when we are asking ourselves, what is the functional currency of the company that I'm preparing financial statements? Maybe I'm making an incorrect call to say my functional currency is the local unit. Because if your functional currency is indeed the local unit, you would want to apply IFRS as the framework that we use in the country. But if you make the assessment that your functional currency is actually a US dollar, then you're already outside the ambit of IS 29, and you would then treat your local unit as a foreign currency. And in terms of how we transact, business has continued because those rates are available. You spoke about how the accountants look at when are we in hyperinflation. We consider five factors, and these factors are not, there's no one factor that is superior over the other. The general population prefers to keep its wealth in non-monetary assets or in a relatively stable foreign currency, right? The general population regards monetary amounts not in terms of local currency, but in terms of a relatively stable foreign currency. So we spoke about, I think earlier on, there was a website of a government-related entity where their prices are actually set in dollars, and you then apply. So this is actually textbook definition of what hyperinflation, according to IS 29, is, not according to the economics perspective. Sales and purchases on credit take place at prices that compensate for expected loss of purchasing power during the credit period, even if that period is very short. And interest rates, wages, and prices are linked to a price index. And the one that everyone catches on to is that the cumulative inflation rate over 3 years approaches or exceeds 100%. So as PAAB, we're actually working with our professional accountancy organizations in the country to research on each and every one of those indicators to see where are we as a country, to say, are we still in the scope of this standard? That would be my comment.
Thank you. I just wanted to add that the issue of hyperinflation is contentious across the continent. The Malawian Institute also took a position that went against the International Accounting Standards Board, whereby the view was that they are hyperinflationary, and they took a local position that they're actually not hyperinflationary. And the result is that the entities that have foreign parents have to comply with ICE 29, and then those that are reporting locally don't have to. So there's a bit of a standoff in Malawi, and I think it's similar to Ghana as well. There's a standoff in terms of what the local regulator believes versus international accounting standards. So it is a contentious issue across the continent.
Thanks, Tapio, for that intervention. That was very useful, even for me. So I will direct the next question to an economist, because we keep on referring to economics. So this is for Professor Gift Mugano. We are in a platform where people are doing budgets, and we still have the brave ones that will still do their budgets in ZIG. And my question to you is, could you just give us an analysis or the performance for the rest of the year for ZIG? How do you think ZIG is going to perform for the rest of the year?
Thank you very much, Tinashe. Good afternoon. Good afternoon. I'm not the governor of Central Bank. Love me. Hallelujah. So, yeah, I had difficulty listening to Pesa talking about his positivity around the ZIG, that no any other emergencies are going to happen in the future. The matter which you are dealing with here is very delicate, and I want to appeal to Central Bank, of course, through my colleague here, Persistence, that let us be realistic, and business is not run on fiction. Business is real. It's not a Hollywood movie. You guys, you told us, so for me to answer the question, Tinashe, I'll give a context. You told us that the ZIG is backed by US dollars, right? And you did a calculation using a formula, which then derived the exchange rate of 13.52 ZIG against $1 US. You remember, colleagues? That formula was tracking the price of gold per ounce. And if I'm not mistaken, at the beginning it was around $73 per ounce, commensurating with $1,800 US, somewhere there. So on, should be 28 September, when you, 27 September, when you then devalued the exchange rate. On that same day, I did the calculation of the exchange rate using gold tracking formula which you used. It was supposed to be 1:11. I put it on my tweet. I put the calculation using the central bank's formula. So, market watchers will not trust central bank, because this is not propaganda which we're talking about here. It's purely mathematics. This is the formula, and you put it at 25 point something, and it should supposed to be 11 against $1 US. The US dollar, the gold is appreciated by just above 30%, which means the ZIG was supposed to be the strongest currency in Africa right now. So people know this. I am taken always on the wrong side, and I actually don't care. Because when I speak on fundamentals. When I argued that the ZIG is going to collapse in 6 months, I was attacked. And the 6 month was the September month, it crashed. Media is there on public domain. And what is it I was saying? I want to repeat, because I'm going to say again something. So I want to give you the context. My argument is very simple. I put an elaborate 4-page document on Twitter, which I typed on 4-page Word document and pasted it to explain, to educate the people, because I love this country. And one key issue which I raised is that you cannot defend the ZIG with the propaganda. You defend it with the production. Now, do we have production? We don't have production. We have drought of production. And the evidence is that we are spending $4.5 billion to $5 billion on importing things which we should produce locally. And that is your toothpick, your chewing gum, pampers, vegetables, tissue and paper, useless things, not aeroplane. So central bank should advise government, the Ministry of Industry and Commerce in particular, and the Ministry of Agriculture in particular. These are the critical ministries which should have structural policies to ramp production. How can you import tissue and paper close to $200 million? These are the figures. How do you spend over $300 million on steel? Over $200 million on pharmaceuticals. So these are the issues. So you can't argue that we want a local currency because if we have a US dollar, it will be kicked out by the US dollar without a compelling policy strategy to address that. So that's why the ZIG failed. So production is a key issue. All right. We have a drought of confidence. And the critical one, reserves. So you saw business here, you had difficulties in accessing foreign currency because you didn't have enough reserves of foreign currency. And you argued our reserves are 3 times the reserve money. Is there no one who is importing using reserve money here? Hello? So you mislead people on technicalities. You calculate your reserve money, notes and coins in circulation. You ignore the money which has been laid out to businesses through lines of credit, through loans, which has been given to businesses. And when they are given that money, they go and buy some stuff using that money. If I borrow money from a bank as a business, I'm going to get raw materials from another company using that money. And when that business are given that ZIG which I've borrowed, is going to go to central bank to borrow money to the auctions or the willing buy, willing seller market. But there's no backup because your ratio is for the reserve money. And then that's where we have fungibility. So it crashed. Then of course the last one I want to talk about is confidence. People have lost their money almost 6 times now. So you can't tell that person through propaganda, through comfort, words of comfort, nice English. You must just make things are working. If I go to the bank, I get the money. If I go to the passport office, I use ZIG. If I go to the garage, I use ZIG. If I go and import my car, I use ZIG. Hallelujah. Are you still there, patient? I hope you were here when they were talking about mental health. I was not here. I heard someone, he's my brother, this one. You have stress here. So this is the economy.
So, Prof.
Yes. So where are we going?
End of year, what's the exchange rate? End of year.
Of what? Because there's no currency anymore. Because the ZIG was died. The ZIG is now like a card box, those card boxes which the conductors, drivers were using when you do not give us change, when you delayed to produce money. No one cares about the ZIG anymore. So who will focus on exchange rate? I will be surprised if I am a board member of a company and you are focusing on the exchange rate of ZIG. I'll fire you. What are you focusing on? Of what? The ZIG is in the mortuary right now. It's waiting for burial. If a currency nation collapses today, after that ZIG propaganda, those songs were coming, how are you going to prop it up? What has just hold it back is because government has not paid contractors, service providers. Right? That's why it has been kept in the mortuary. Government has not paid export retention, and they're massive. And that's why it is in the mortuary. And the question is, how sustainable is government going to be holding payments to contractors and service providers since August last year? How are they going to hold that? So there is also serious issues in business where companies are collapsing because of that. So I can't talk of a ZIG for up to the end of the year. It will be a miracle. It will be Lazarus.
Okay, loud and clear. So, Prof, the next one that we need to discuss is Nostro in our banking system. When you look at, will that still hold? Will Nostro still hold by the end of the year?
No, thank you very much. So, I think what is obtaining is that we have fictitious US dollars, because I think our deposit is around $2.8 billion. And the hard notes and coins which you can access is about 729 million US dollars. So if we had a formal economy, which is working, payments will not be going through right now, because of the mismatch between the total amount of US dollars which are which are hard notes and coins, 729, against a total deposit of 2.8 billion. So it's like 1/4. We have 1/4 of the amount of money which is in the deposit. So the other ones are RTGS in US dollars. But why the system is working, collapsing, is because we now have an informal sector, and companies are selling and getting hard notes and coins, and they are not banked. That's why central bank is worried about the managers are being kept in offices, in boxes, what, and payments are being done, supported by TTs, and they go. But if we did not have an informal sector which is pumping, which is rich with cash, the system would have, we would be seeing queues of payments. I don't know what's happening in the banks. But for me, it's a worrying factor that we are seeing declining share of the hard notes and coins being 1/4. And that in itself, in the future, maybe in 2026, in some companies have gone to present state of the economy and economic outlook. My projection is that the ZIG will die, will be buried this year, in 2026, to come back as a ghost, and we have it again. So current cycles, we go into current cycles like what we did in 2019, if you remember, with the local occurrence. Then in March 2020, we went back to US dollars. And when we proceeded again, we came back to US dollars. So we've been having current cycles, something which I've never learned about in school, but we are seeing it in Zimbabwe. So that's where I can read where my brother is coming from. I don't know whether is he aware of this when he say we are going to our local currency. I don't think it's a proper de-dollarization plan. It could be the collapse of the US dollar regime, like we're in a replay of 2013, 2018. But before we get to that replay, there will be barrier of the ZIG, continue with the US dollar, then the system jams in 2026 along the way. But it also depends on what government do to address the economic environment. If government is serious about addressing the economy and formalize the US dollar in the informal sector, whatever magic they are going to use, Dr. Mangujga once used the domestic export retention allowances, and also close the leakages, and also address the issues of imports, which are importing. We can sustain, we can avoid going back again to the current cycle. But it's a mammoth task, it's really critical thinking.
Okay, thank you very much, Prof. We'll come back to you later. But for now, I want to come back to Tapio. You said something very interesting about Malawi, And my question is, in view of the discussion that we're having here, what's the most sensible way for companies to navigate the regulations while still presenting financial statements that make sense for decision makers?
Thanks, Tash. I think it's a chicken and egg situation because companies are not operating in a vacuum. There are regulators who are asking for certain information in a certain way. So companies will find themselves having to toe the line. Some companies have foreign parents as well who need to issue a clean opinion in their various foreign jurisdictions. So the expectation would be, look, do what you have to do, but we can't handle a qualification at group level. So you'll find that a lot of local companies will end up having to comply with what's there. Some companies would, as was mentioned earlier in the day, publish supplementary information. Perhaps communicate to the market in a different currency and give information to the market that will help them actually understand the performance of the business and how the business is going. So I think that's the kind of the tension that companies have to go through. But just maybe a comment, perhaps changing the subject slightly, but picking up on some of the conversations that have been mentioned. I think from a consultant's perspective, I think technocrats, and I'm kind of including us, are generally not very good at change management. So, and you see it at a company level, and even at a national level, I guess, in a sense, whereby there are aspirations to achieve certain targets at certain times, but it's the change management which is difficult. How do you take the nation on the journey? How do you get buy-in? How do you engage stakeholders along the process? And sometimes to get to the answer, it's not just about getting to the right answer technically, but I think it's about the change management process of bringing stakeholders along the way to get the buy-in.
And then another question for you is, again from a strategic perspective, is we're seeing a lot of cash business and movement of cash, and sometimes our control mechanism or theories that we learned from school are not perhaps appropriate. We're seeing people banking money in Zambia, Botswana, and it's now movement of cash, even in the informal sector. Could you just give us a glimpse of what you would, your advice to us as accountants and as financial directors, how best we can improve on controls and maximize on controls?
Sure. I think you talked about the informal sector, and I think it's here to stay. I think politicians in any part of the world generally get their numbers from the local population, and that's the informal sector, whichever country are. So I think there will always be a bias, national policy to promote the small people on the ground. So I think informal sector is there to stay, and I think it's up to businesses to relook at their business models and ask the question, how can we actually tap into that wealth that's in the informal sector? Because I think the world is shifting. I think technology plays a big part in terms of controls. I think we've seen mobile money, playing a big part of transactions even in the informal sector. And I think that automation and digitization, as other speakers have mentioned, I think definitely has to be key in terms of accessing that side of the business while still retaining controls. Flows of money outside the country. I think the illegal flows, I think are outside of our control. But I think if we can do the best we can to offer product and service to those informal kind of SME players, I think they'll still prefer to buy Zimbabwe.
Thank you. At this time, I still have lots of questions, but I think that it's only appropriate that we open the floor. So if you have any questions, I think somebody with the mic will come directly to you. We've got a very good panel here that can respond. So does anyone have any nibbling question? Okay, got a question there. Could we get the mic?
Thank you. My question's for Prof. Prof, I just wanted to get your insights. It's about policy and may not have been discussed and in your panel. However, you supported our tariff stance as a country on the US. Would you care to shed light on that to just assist us? We are accountants and not economists, so would like to have full detail of your perspective. I'm of the view that we probably shouldn't have, but I'm open to learning. Thank you.
No, thank you very much. So I'm a neoliberal economist. I believe in a market economy. I believe in a free market economy. I don't believe in protectionism because of the costs it comes with. So my studies, my publications, my books are around the trade liberalization. I want a free economy. I don't believe that we can remain competitive by protecting ourselves. We've been protecting ourselves from independence. We've not come out of it. We've remained infant industries, right? So that's the first thing. Second thing, wisdom requires that when someone is raising temperatures, you don't also raise your temperatures, you cool down. So I took it that when government made a decision to remove tariffs, it is wisdom. In any way, we are like a rat. America is an elephant. So you can't say when America raise tariffs on you and you also raise tariffs. So again, that is where I'm coming from. But I observed a number of critics raising this issue when I put it on Twitter, that you should have gone through SADC, you should go for a regional approach. Zimbabwe was kicked out of AGOA, which is a framework where America trade with African countries. You can go into America on a duty-free into America. No one stood with us to push us to go into AGOA. So some of these things are very theoretical. You have to look at your own country interest to push that agenda. That's the other point. But I also want to argue is that if you are open for business, that's one step to do, to open up, because that will help us even to import. When you're importing, remember 1990, when we adopted the Smith industrialization strategy, we had a protectionism strategy agenda, and that constrained economic growth because we're importing high cost of raw materials, machinery, equipment on taxes. So when you remove the tariffs, you can also import stuff at a lower cost, and that helps your competitiveness. Yes, there's a dark side of it in the sense that your industry won't be able to compete. But that's the same story. In SADC, we are there. It's liberalized 90%. So there's nothing new here under the sun. So I support free trade. And I was also going to argue, I was building a case to also argue for the business to say, the same way you've done for the American business, do it for Zimbabwe as well. So I was creating a base for that, just for you. Thank you.
Told we've run out of time, but I'll have maybe everyone just give us their 2 minutes just view on where we're going as a ZIM and just the complexities that we're facing in ZIM and how best to navigate.
Okay, I'll start. Yeah, I think the complexities are there, and I think my exhortation would be around dialogue. I think there needs to be dialogue between regulators, the accountants, business, because I don't think any one constituency can actually, make it alone.
Having listened to the interactions of the day, I think we need to focus on the ease of doing business, the cost of compliance, the regulatory issues that businesses need to address. That's a good takeaway for me.
Okay, thank you. I just want to correct the sentiment from Prof that the rate is linked to gold. It's not. It's backed by gold. But when the ZIG was introduced, the mechanics of calculating the initial exchange rate meant some linking of the ZIG to gold was based on the linking of ZIG to gold. But post that, we don't expect the rate to self-execute around the changes in the gold prices. Therefore, unsurprisingly, in September, on account of the rate being backed and depending on other factors other than the price of gold, it was possible for the rate to depreciate, which could be a reflection of the adjustments post the linking that happened at introduction. I just want to correct that. But in terms of the future of our local currency, I still think that there is future in our local currency, in that all we're seeing is still necessary adjustments. I sort of hear the sentiments that there is no ZIG in the economy. I don't know which is an adjustment that is supposed to happen in the economy. Because if you want ZIG in the economy, approach your bank to convert whatever you have to ZIG. So which is the mental adjustment that is also happening, that should be caused to happen by policy. The central bank has maintained a tight monetary policy stance. And this tight monetary policy stance is expected to cause necessary adjustments to normals. We admittedly are not yet there. Even our government, there's still some high appetite for the US dollar. But I want to assure you, with a tight ZIG policy stance, the government may have to unwind its appetite for the US dollar in favor of the ZIG. You were talking about the surrenders that were outstanding at some point, but which to me speaks to an appetite for the US, could speak to an appetite for the US dollar, which is not supported by developments in the economy. And the only thing for government to do would be to reduce that appetite, which may speak to the drive for our local currency in the jute space, in the taxes, and other statutory obligations. And this is the future that we must walk as a country. Even the banks, I hear banks talk about no liquidity in the market, ZIG liquidity. But to me, it also speaks to the extent to which this unwinding should be considered by banks. Whilst they talk about no ZIG liquidity in the banks, but you also see their balance sheet and capital is predominantly US dollars. And you spoke about the preference of the US dollar as a store of value, which is now made us to be categorized as a hyperinflation environment. So on account of tight monetary policy stance, which is what Reserve Bank is doing, it may then cause banks to unwind their positions, because no one would want to use his US dollar, because in the first place you have accumulated to store value. But we want that ZIG, that US dollar to work. But if we have got a tight monetary policy stance, we will cause you to liquidate that ZIG into US dollar, into ZIG, and that ZIG will be more productive in the market space. I'm just trying to show you the policy direction and what will cause what. And if that happens, we will start to see a pickup in the economic activities, in the even lending in ZIG by banks. And as we get to that stage, we will start to see banks supporting the productive sectors of the economy. Because clearly and admittedly, our challenge is deindustrialization. We need to now all wrap our minds around reindustrialization. And what the monetary policy is doing is also causing us to get into the frame of reindustrializing the economy. The fiscal side has already indicated that they are going to be driving the demand for the local currency. And we expect to see that happening with more duties and taxes in our local currency. They've started, but also, as is indicated, the monetary policy stance will cause that position to happen from the fiscal authorities. And as we start to get into that position, we are likely to see more life in our local currency. So the message is, the temptation to look back is always high as the situation seems to get tough. But it's easier, yes, than to opt for the easier option, because I can see the temptation is to look for the US dollar as the salvation to our situation. But I think we need to forge ahead with our local currency. There is more benefit to doing that than to looking back.
Thank you.
Thank you, Tinashe. I will not waste time in disagreeing with he knows the truth. So I will focus on the future. The future of the ZIG is doomed. And one policy I want to mention for Percy, for when it goes back from a productive point of view, is the exchange control. Right, the existence of the exchange control policy, which compels central bank to hold 30% of exports, right? And you then give it to companies as ZIG, which you are not doing. And in addition, coupled with that, there's a statutory instrument which compels the exporters to pay tax in the currency of trade. And the currency of trade being now US dollars for exporters. And the government refuses tax in ZIG. In addition, the other statutory instrument also compels companies to pay for ZESA. I see ZESA holdings there. In the currency of trade, which is US dollar again. So the challenge with that is that, which kills the ZIG as well, over and above confidence and production issues which I raised before, is that exporters will not have any means to use the ZIG. They will be having ZIG they can't use. Particularly if you give them the ZIG into their account, they can't use it. They will be having excess ZIG balances, right? Does it make sense to business? So if you have excess ZIG balances which you cannot use to pay tax, which you can't use to pay for ZESA, and knowing that 70% of exports are driven by mining companies, so we have a structural issue in terms of performance of our willing buyer, willing seller market. What is the rationale of the company which is holding ZIGs, or which is being owed ZIG by government, by central bank, to go again on the market and sell US dollars? So the foreign exchange market will remain a controlled exchange market, and will not have light of a freely floating and an efficient exchange rate. That is an enemy to the ZIG survival. So take it home. That is my submission for progress. I want to end by saying, in 20 seconds, we have a government which is getting broke every day. So a broke government is a danger to the economy on the back of a growing informal sector and a slowing and a shrinking formal sector, to the extent that the revenues going to government are going down. I think last time I checked, around $6 billion they raised last year, against a possible target of $9 billion. And major contributors, your company corporate tax is now 9% contribution to total revenue, down from 20%. The 2% tax used to contribute about 16 to 20%, is now contributing about 3%. That has got a ripple effect on aggregate demand and the functioning of the economy. So this year is a difficult year. It's very difficult for you is when you go back to plan to say our budgets are going to be like this, because your budgets comes from sales. So your sales won't be as performing as they were doing last year and last year but one. So it's a gloomy year. And we will go for the burial of the ZIG before the end of the year. I don't even think we'll reach to June, but that is what I'm seeing in the spiritual economic world. Thank you.
I think we can agree without controversy that there's much less demand for professional accountants in the informal sector than the formal sector. And so what I'd say to you is that as the informal sector continues to steal market share from the formal sector, it's an existential threat to your profession. And I think it's incumbent on you, therefore, to speak out when there are policy actions that are inimical to a flourishing formal sector, because you are hurt the most as the formal sector continues to shrink and lose market share to the informal sector. So I would encourage you to engage the policymakers, be polite but firm, and call a spade when we have policy actions that are not working, that are harmful to the economy, that are hurting the formal sector. You have an obligation to speak out and call a spade a spade.
Thank you very much, everybody. Well, that's it. I certainly enjoyed this. It was very informative. Thank you very much. Let's do this again.
Thank you very much, Tinashe, Rufaro, and my panelists. I would want to mention, have a special thank you to our economists. I know we called you late, but you are always supporting us, coming to our conferences and having a lovely debate. Thank you very much. A round of applause to... While I'm waiting for my colleagues, I want an applause as well to yourselves for enduring it up to an extra hour. You deserve that. Thank you very much. Colleagues, can we give our panelists